is over as of today. Seems just totally impossible to me, but here we are at the end of the March, which is going to finish as our one of our worst months now since 2022, since mid 2022. So obviously, if you're like me and you're mostly bullish, that means a lot of brutal days in the month of March. And I'm hoping that unlike 2022, we don't lead from tough days to more tough days month over month and get some stability here, even if it's not a raging bull market in Q2, that we get some stability, and we don't get as much hectic, which I think we will. I think even if we get more bearishness and even if we get into a downtrend, I would expect that we at least start to kind of taper off the volatility to some extent. But let's get kickstarted here for March 31. Here we go. Jump into high gear. Today's session will probably be a little bit quicker. I mean, there's supposed to be a half hour. We normally end up going a good bit longer, but I'll try to keep it a little bit closer to the half hour today. I am running on very little sleep over the last 24 hours. We caught a flight last night, flew overnight, so I'm running a little bit close to E here, but we'll try to get through. Mainly, what I want to talk about is kind of where we sit right now, more generally where things look like they could be headed, and then a couple of key stocks that I think are at decision points right now to have on our watch list, and then track, over the next month or two to see if we get some clear signals here as we move into April. And so that's the main thing. If you guys have questions or anything you want to dive into specifically, I'll try to carve out a couple minutes for that. But for the most part, try to move a little bit more quickly through today. So again, March 31st. Thanks for all of you who were able to hang tight without me giving as many updates and things like that as I typically would the last couple of days. I appreciate all of you checking in and asking. I had an amazing time, incredible place. Would certainly do it again. And obviously just wish the market wasn't really degrading while I was out there. But here's where we look so far. This is just today, including the overnight market yesterday. So just basically the weekend gap going into today. And the interesting thing about today is that it's actually fairly bullish. Most of the sectors are actually up today. Really, only XLK, which is the tech sector, is pulling things to the downside. Almost everything else from the overnight into today is actually positive. Energy is positive, utilities are positive, communications are positive, staples are positive, and really just tech pulling things down. So once again, we don't have like a really heavily weighted depressionary market across most of the sectors. When you zoom into a certain day, we just kind of have things rotating in and out, and mostly tech, and then consumer discretionary having these big negative liquidity yanks on the market. So unfortunately, because of Friday's huge move to the downside, I mean, just a hideous, ugly day in the market with a massive plunge, it sends us right back into no man's land here on the SPY. Things were actually looking fairly optimistic for at least a bounce higher. I thought for sure we would get into the low 580s here. This is the level that I thought that we would absolutely hit here on SPY, right in this low 580s number. Instead, we flipped around a couple dollars short of that and absolutely crashed through Friday, which put us right back into kind of the bottom here. Now, obviously, what I'd love to see is something like this, where the market looks like it's crashing below, and then we get a nice little pivot in the week and we move higher. I think that's obviously a very optimistic potential. And more than likely, I think what we'll see is kind of a move into here and maybe some lower lows or some sideways movements until we kind of figure out where we're going. But right now, I definitely think that we're kind of stuck here in between and really not where we want to be. So I think the question we have is, what we've seen so far, is it a pullback or is it more of a recessionary move? Is it more of a bear market or recessionary play? This right here is Trump's first term and how the market reacted relative to the second term. Okay, so you saw the first term and the second term both started off with a nice run. In the first term, we actually did have a pretty decent dip here. We were up over 5%, and we actually had a pretty decent dip down to about 2%. And then obviously the rest of the term quite bullish. What we've done here is we had a nice little positive jump and then an incredibly aggressive over 10% move to the downside. So the question is this still mirroring something that we've seen before where we're negative, but we're going to eventually turn this around? Or are we actually just seeing a mirrored, like opposite image where we're actually going to see a trend down that kind of splits, one term being a bullish term, one term being a bearish term? And I don't think the verdict is out, obviously, on that. But I do think that the biggest benefit we have in the second term is that if most of the negativity is tariff related, that you kind of get to a flat cost there at some point where it's priced in, and then you should be able to rebound from that point. Obviously, we have not found that baseline yet because the market made a new all-time low at the open today, so we have not found that yet. But we should theoretically find a baseline where tariffs are priced in, and then we can start to build a base and move forward, even if it's not a supercharged bullish market. Now, I told you about a week and a half ago that I was actually 60-40 optimistic for Q2 because of all the data supporting a rally from the mid-March low. So we won't go through all that data again, but I shared that all of the quick flushes over the last couple of years have ended up being very bullish. Seasonally, we were fairly bullish. The retail area was, getting bearish, which is actually a bullish sign. And there was enough there that in spite of really negative momentum, that I was thinking, hey, we might have a 60-40 or even 70-30 chance that Q2 ends up being bullish. Since then, three things have me quite concerned. So the first one is that today we made lower lows. So a lot of what I was hoping for was that we would actually cement this March 13 low as a true seasonal low. And even if we didn't spike straight from there, that we would kind of build and eventually move higher. Obviously, that didn't happen with the collapse on Friday. And now we've made a lower low. So if we were to, actually make a big turn here, it's not going to be at the mid-March level, which is what I was really hoping. So that's number one. That's a blow to my 60-40 kind of optimistic view. Number two, the Mag 7 collapsed. Okay, if you remember, and I'll talk about it again in a second, I really wanted to see the Mag 7 drive bullish optimism. We got this nice run where we kind of built a base here, then made the move into the 50 area, which is the area I thought we would need to get a decision point at. And instead of kind of going sideways and then moving higher, obviously we got a total collapse from 50 all the way down to 44. So that's about a 12% move on the Mag 7 in under 3 days. So when the Mag 7 collapses 12% in 3 days, obviously that means that it's not driving forward. It's driving very, very much the other direction. Apple really the only stock that's holding up fairly well just in the last couple of days here with that negative pressure. And so certainly Mag 7 needs to pick things up, needs to figure out a new base here in drive price if we're going to see any bullish optimism from a new low. But the likelihood of that now is getting lower and lower as we get deeper. And the third thing, and then what I think is the most important thing, is that insiders are not stepping in yet. So if you remember when we talked about this, I said, hey, retail is bearish, which is kind of one side of the coin that you want to see, but you also want to see the insiders buying, just like they did at the lows in 2009, just like they did before the 2012 rally, just like they did during COVID, and even up here like they did at the end of the 2022 bear market. We're still way down here currently. And so we really have not made that kind of move yet on the insider buying that shows that maybe the end is near. And that likely means that we'll see lower lows. When the insiders have not yet stepped in and said, okay, now we're at a point where prices are good enough, where the move down is steep enough that we're starting to accumulate again, that's not a good sign. We've already seen a 10+% correction. So for those three reasons, obviously my optimism is fading. It's not down to zero by any stretch because I think Right now, even if you look at where the SPY is, you can kind of throw these key levels out the window to some extent because of how this market is moving. I mean, again, this is a great example of that right here, where we saw the market make this move and it looked like we were breaking lower. Then it gapped low and we thought, okay, now we're really going down. And it actually ended up turning around and being rather bullish. So I wouldn't throw all the optimism out the window by any stretch yet, but certainly doesn't look very positive right now. And I really don't like that insiders have not stepped in yet. So when we're in this wait and see mode where we're kind of ugly, we're negative, but we don't have any clear sign yet for directional trading. You guys probably know the drill by now. What I'm going to say, a couple key things: use covered calls, be consistent with the mechanical strategies. Don't get too creative. Don't start making dramatic changes. Stick with systems. Swing the bat. Look for opportunities because you never know where that big rally is going to come, where you win a handful of trades and you kind of make back ground. If you wait and kind of change the rules or make big fundamental changes to your strategies, that's typically where you actually double down and take the worst losses. So I recommend being very careful, being consistent on that. And then paired trades is always something I lean on when the market gets really crazy. Pairing things up like technology stocks that are moving a lot right now, even the indexes like buying the SPY while buying calls on the SPY while buying puts on the QQQ. Things like that can do really well in these extreme volatile markets. And then the covered calls obviously just gives you some insurance along the way. If the market continues to move lower and move lower and move lower, you just lower your cost basis, and that helps you, kind of uh, build in a little cushion. And then if the market rips, you'll probably get called out of some trades and take some profits, which is not the worst thing in an environment like this. So those are really the three kind of very basic things when the market gets this volatile that I always lean on and that I recommend. Now, there are several stocks at key decision points right now, and these are the ones that I want to get to. What I think are the most important, or at least some of the most important now to have our eye on and see what happens. So PGR just filled this gap. This is Progressive Insurance. Had the big drop down here, and then we just filled the gap. So this is a decision point for Progressive. Progressive is a stock that I like, have always liked because it can do well in optimistic markets, but can also do very well when there is selling pressure, and has continued to actually rally quite a bit, even in the last couple of days where there has been selling pressure. And so I'm curious to see what it does right around this key level. If it continues to move higher, I think it has a chance to easily break all-time highs. And so I think Progressive is a stock to keep on the watch list and could potentially be one that you add or kind of do some stacking trades on, even in spite of bearish conditions. That's what I'm doing with Progressive currently. GE, another stock I shared last week that I still really like. Looked like it was breaking well, it did break actually all-time highs, and I thought we might just shoot up higher. Instead, Friday yanked it down with all that momentum, but obviously held up a lot better than the rest of the market because the rest of the market, gapped down below the lows. Here, GE kind of stopped right at this decision point here around 195 and looks like it might want to rally again. So that's one to keep an eye on. Two ways to trade this. You could either buy it and just look for it to make a high back or at least move back to 210, which is kind of what I'm thinking here. Just go ahead and kind of sneak into it early and see if it can make that move in the 210 range. Or you could wait and see if it breaks again and then just catch it at the all-time highs and look for a couple percent higher. So either way, I think is a very tradable move here on GE. That's General Electric, but not the General Electric that you're familiar with because it's really the aerospace division here that we're talking about when we look at the regular GE stock. Walmart is stuck in this box still. We've now been a couple weeks here where Walmart doesn't seem like it can really get moving one way or the other. But if it does, I like it, specifically if it makes a move to the upside. If it breaks above 88 bucks, I really like Walmart still at this point. I think, there's no reason for me to believe that Walmart won't get to all-time highs at some point, whether we're talking months or years, who knows, because of where the market stands right now. But I think if it breaks, it's still a pretty good opportunity and one of the more stable stocks you can buy. For me, it falls into the Apple category. If it's on a discount and it's starting to show any signs of optimism, I don't mind grabbing shares. I don't mind kind of stacking positions there. I have a fair amount of confidence in Walmart. Exxon is an interesting one because if you look over time here, this is going all the way back to 2022. Exxon really looked like it was kind of lackadaisical and sideways. But as you zoom out, it's actually kind of grinded into a fairly nice bullish trend here since 2022. So it continues to move and made this base here around 110. Now making new highs, had a really nice last couple of weeks as energy has been picking up quite a bit of steam. Definitely had the strongest rotation here in energy compared to any other sector. Exxon benefiting from that, and I think is a good opportunity to probably make higher highs here as again this kind of slow grinding trend continues. One thing you can do here if you don't want to trade Exxon outright because it doesn't maybe move quite enough to get excited about, like trading it up to the 125 range. It's maybe not the most exciting trade in the world to take, but you can do some income trading on Exxon, either credit spreads or debit spreads below the current value, just looking for Exxon to kind of grind higher, even if it has some of these sideways spells here, get down below price and do some income trading on it. I think that's definitely a valid trade there on Exxon because, I mean, just look at the chart. It's not been a pretty momentum. It doesn't look like Palantir or Nvidia when they get rolling, but it's actually been one of the more consistent um, stocks now through this very negative pressure that we've seen in 2025. Tesla's an interesting one to me still. I mean, we've talked about Tesla quite a bit because of the massive 50% correction that we had on Tesla. But what's interesting is that even though it got really ugly on Friday, dropped all the way back down, it was near 300, flipped all the way back down to 250, it didn't make a lower low down here like we saw on the SPY. So this one's interesting to me. Again, I don't think Tesla's a quote unquote great stock right now. Certainly not a big momentum play to the upside. But the fact that it did kind of hold the ground and try to find some support here is interesting. And it's just purely a risk reward standpoint. If you want to try to trade it up to 350, I think it's a good risk reward, even as ugly as the chart looks. And I think the fact that it didn't make a lower low maybe shows you that the beatdown of that 50% correction was just a little too much because we had so much selling pressure. There's no reason for it not to have made lower lows as one of the most risk on, beaten down stocks with one of the more negative views in the entire stock market right now. And yet it stayed well above those lows while the entire indexes moved to all-time lows. I think that tells you that Tesla probably was oversold here. And unless we get a lot more selling pressure in the indexes, which to be fair, there's a good chance we will. But until then, I think that Tesla has a chance to try to rebound again. And from a risk reward standpoint, you're probably not going to find a lot of better candidates than good old Tesla after that crazy move to the downside. And the last one I want to mention here is gold. Gold's one that I've been beating the dead horse on since the end of 2023. Makes up a nice chunk of my portfolio and has really been just a world beater over the last year and a half. Continues to gain. If you guys were with me in the round table, that was several weeks ago. I said I don't really think you can go wrong with gold. That's continued to be correct. It's surged higher and higher. It's acting very much as that risk-off asset with a lot of liquidity pouring into it. Now, I do think gold obviously will have to make a correction here at some point. And whether it corrects just kind of into recent highs, somewhere in here, or it makes a real correction back into the 270 or even back into the 250 to 260 level is probably the question mark on gold. But until then, until it really actually flips around and makes that move, I just think it's kind of a no-brainer to have. Again, you can trade with income trades. You can kind of just stack a position. A lot of different things you can do with gold that I think make it a very good candidate to have and use in different ways, especially while fear is at very, very aggressive levels. Obviously, VIX pushed back above 20, and I think we're going to continue to see that for the near future. So gold's kind of the last one on my list there of those 6 stocks that I think are in interesting decision points that all make sense for the watch list. All right, so I ended up getting through that in a little over 20 minutes, which was my goal. I tried to kind of be efficient here with our time today. If you guys have any questions, you can let me know. Otherwise, we can wrap it up. I just wanted to get a quick update here. We are in no man's land, so I'm not going to have a lot of directional bias over probably even the next couple days until we get toward the end of the week, where I think we'll have some. For those of you who have our weekend trade, SPY is trying to fill that gap. Hasn't quite gotten there, but about 2:30, 2:45, I will give you a full update on our position, exit guidelines, and all of that stuff here in 40 to 50 minutes. So just keep an eye out for that. It'll come directly as a trade alert, and I will let you know everything in that message. And we'll go from there, obviously. But fingers crossed, we get one more surge here on the SPY. Just a nice $1.50 or $2 surge in the last 2 hours of the market would obviously be great for us. So we'll keep our fingers crossed for that. But no guarantees. Probably fairly likely here that we'll just kind of grind more sideways would be my guess. With gold, yeah, I trade GLD most often, Lauren. That's kind of the go-to ticker for me. It's what I hold the most of. It's easy to do income trades on. Has pretty good liquidity to trade the options as well. So for me, that's one of the trades that or one of the tickers that I always have quite a bit of in my arsenal. Dave, yeah, if you go to that investing 2.0 strategy training, I'll have to find a link for you, Dave. I did kind of a hour long training on what I call investing 2.0, which is essentially what I mean when I say stacking. So it's basically just every week giving yourself time and room on a position, whether the market's going up, whether it's going down, whether it's going sideways. It's not really directional at all. It's just a way to play your portfolio using options instead of just holding the stock or cost averaging with the stock. Using options just gives you a little more bang for your buck, a lot less, a lot less risk out there on the line at one point in time. Because the way that I do it, you can trade them quite cheap, and then you just give yourself time each and every week, extending that time horizon. And when you get those rallies, you can hit a lot of targets real quick. So check that out. I have a little one pager that's free that you can check out as well. That kind of goes along with it. Directly in GLD, someone asked me what my portfolio is right now. Uh, Probably 12 to 13% directly in GLD. So something in that range, I would say. Oh, did Newsmax have the IPO today, Fred? I for, I've I forgot I haven't been paying enough attention the last couple of days. Was today the IPO? Yeah, I know some people at Newsmax actually. I've met them, not know them well or anything, but just have met people through the course of different scenarios. Um, I don't know their financial numbers well enough to give like a big bold take or anything, but I certainly think that they're trying to fill a cavity of being not trying to play the middle, like not even trying to pretend to play the middle, which I think is essentially where news and media is going. This idea of like pretending like you're in the middle news organization, but really having biases on both sides, I don't think has played very well. So I think that cavity makes sense. I think actually putting the revenue numbers together to meet a high valuation will probably be very difficult, though. So that I guess that's kind of going to be the question that we have to see once we start getting some quarterly reports and things like that. No, Linda, I'm still stacking. Obviously, I'm expecting, we might have some continued short-term pain, and that coming with the territory. But I'm still just kind of waiting because I don't know when the rally is going to happen. Could be today, could be tomorrow, could be 6 months from now. And so for me, just kind of keeping that risk consistent, looking for the opportunity, and trying to stay consistent week in and week out, extending that time horizon, and then hopefully we'll get a nice rally and things can move quite quickly. And yes, we will have an overnight trade here in about 90 minutes. Absolutely. All right, folks. Well, I hope you have a great rest of your day. I hope you have a great rest of your week. Thanks for jumping on. I was a little bit shorter, a little bit briefer today. Thanks for bearing with me. I'm just still kind of getting back into the swing of things here. Got back this morning after a nice a nice overnight ride, and I will continue to kind of get back in the flow and have more updates and more sessions and all that good stuff. But fingers crossed, like I said, for a hope against hope rally that puts us back in good position here in the market because it's always a lot more fun when the market's moving in our direction. But either way, we'll find ways, we'll find opportunities, and we'll look for good opportunities, whether the market's up, down, or sideways. Cool. Thanks, Scott. Thanks, Lee. Yeah, Phil, even though it was a little bit chilly and I was long sleeves the entire trip, the face still got hit. So I got a little sunburn, windburn mix, I think, there over the last 4 days. But can't complain. Was amazing. Ended up actually getting really good weather, all things considered. So certainly cannot complain and would absolutely do it again in a heartbeat. All right. Bye, Dave. Bye, John. Thanks, Linda. Bye, everyone.